Today we are talking, friends, not to somebody who's just built a company. We are talking to somebody who's seen companies mushroom, sprout, scale, fail, and also disappear. He's also lived through multiple economic cycles. He's seen multiple generations of founders, technology waves. So he's seen a lot. He's actually seen life up and close. Kanwal was the first Indian American founder to take a venture backed company public on NASDAQ. And then later on, he went on to found the Indus Entrepreneur, the entrepreneurial ecosystem. Over the last few decades, he's mentored more than 10,000 entrepreneurs and invested in more than 200 early stage startup teams. But what makes today's conversation, more interesting is not just, it's a learning from covers, art or pattern recognition. So these days, there is a lot of, buzz around the topic of artificial intelligence. Well, we are going to learn from you about actual real intelligence, right? So, and not just artificial intelligence. So this conversation is going to be beyond his biography. It's about judgment, what actually saves companies and what actually quietly kills them. So, Kanwal, thank you very much for doing this and for being here. I'm looking forward to this conversation.
It's my pleasure, and thank you for having me.
So, Kanwal, we are going to start with the first question, the first phase of your journey. So, please tell us something about, which we can learn from you when you started as a founder, as a young founder. So, before you became a mentor and investor, that what do you think was your early version was? What kind of a founder you were?
I worked for 13 years after I finished my master's, in the US, before I had the itch, to become a founder, and also the confidence. The I was a very good engineer in Silicon Valley, living the dream, making good money. But then I realized that I wasn't getting the promotions. At the age of 35. I have reached the top of the ladder, and that thought scared me that, but I'm 35. There's no more, place to go. The best engineers they have. And so when I talk to people, hey, have you thought of my bosses? I mean, have you thought of me becoming the manager? And the answer was no. The Indians are very good engineers. We were typecast as the engineers, and we don't want to lose you. And you may be a poor manager, or may not have a managerial skills. So we don't want to risk that. And so that was very clear that if I need to do something, I will have to be on my own. And back in 1981, somebody who had worked for me started a company. And all of a sudden I said, his name was David Jackson. David Jackson had the nerve to leave his job, good paying job, and go become an entrepreneur. What's holding me back? And I had no good answer, other than, I'm very well set in my ways, I'm making good money, and I don't have the courage to risk anything, right? But that thought bothered me a lot. And eventually I had to say, I have to go and try.
So you mentioned that you worked in a corporation or various jobs till the age of 35. You became an entrepreneur at the age of 35. So you would have worked for about 10 odd years, right?
Yeah, about 13 years.
13 years you worked, and then you decided to become an entrepreneur. And tell us something about your first venture and what was it about? What problem you were trying to solve?
Well, it was about computer networking. We were pioneers in computer networking, and all these house-buzzer machines people were buying. Somebody had to put them on a network. People used to wait for chips to become available. If you want to do networking, let's wait to see if a networking chip is available. And and I said, I can design networking interfaces for all these computers using off-the-shelf chips. And back in 82, one day I sat down and I picked up the Ethernet specs, which was the networking protocol. He said, let me see if I can, come up with a design. And within 2-3 hours, I felt, I could design a Ethernet interface, and that became the basis of our startup.
As you build, as an entrepreneur, you go through struggles, you go through highs and lows. So was there a phase, a particular quarter which came where you thought that you will not be able to continue this venture? This is not going to happen.
Well, that was later. Yeah, so we have a design, we have a market, yeah, but we don't have any funding.
Okay.
And the Indians were not seen as entrepreneurs. We were not seen as managers. We were seen as tatties.
Okay.
Yeah, can you sell? Can you market? Can you manage money, finance? Can you be a general manager? So all those things were still the issues. We talked to over 100 venture capitalists, and before one said maybe, we had lots of no's. And this venture capitalist, said, very smart plan. You guys are very smart people. Maybe it's time to try fund one Indian entrepreneur. So we got funded towards the end of 1982. We worked for 1 year,
Okay.
without any funding. In that period, I designed the boards. We used our own capital to build prototypes. To see the stuff works, actually works. And by the time the money came, we had the working boards. We had a customer who had given us a custom design work for $75,000. And so we had shown that we can sell, we can definitely design. And so we got $2 million of capital to go do it. And there were three of us, myself, IIT Bombay, undergraduate, Michigan Tech, masters. There was this guy, Naveen Jain, a BITS Pilani gold medalist, a CMU PhD. And third guy was Dr. Inder Mohan Singh, IIT Kharagpur graduate, a Yale PhD. Inder Mohan was also a Dune stool, a person very polished, very, very poised, very smooth. And so he became the CEO. And three of us, Inder was out raising money. I was designing hardware. Naveen was writing software. Everything got done. We got funding. But nobody's buying our stuff. We got in trouble very quickly, but nobody was buying our stuff. And they looked at me and says, why don't you step in as the interim CEO? Don't spend too much money. We'll go find a new CEO to see, but no more money for you guys. And there was enough cash in the company for about 8 months. And overnight, I went from being an engineering VP to CEO. Very quickly have to change myself. White shirts, tie. Then to shave my beard and all that. I'm going to be a CEO. So why are we not selling? Why aren't people buying from us? So I asked, in my staff meeting, is there no need for what we are selling? And everybody agreed there's a huge need for what we are selling. Is there a competition which is superior to us? But there's no competition which is superior to us. Are our parts priced right? They are. They seem to be right at the market. So why aren't they buying? And so I said, do they know we have it? And everybody would turn and says, well, the phone is not ringing. I said, we need to let the world know that we have this part. So I said, we are going to start advertising, and maybe we'll take 2 months worth of cash and put into advertising. Everybody looked around and says, we only have 8 months worth of cash. I say, if you don't do anything, we slowly would die in 8 months. Why don't I take 2 months worth of cash and see if there's a fighting chance to live? And if you die in 6 months, what's the difference, right? So that 2 months worth of cash in advertising made a big difference. Phones started to rent, and people started to buy. So once we got there, the stuff is happening. I'm not worried about now surviving. Our prices seem to be low. The software was priced very, very low, $60 per copy. And I said, how can I make any money? $60 per copy. So I asked the VP of sales, how many boards do you think, how many copies of software do you think will sell this? He said 10,000. I said, if we get lucky and have a blowout year, he said 20,000. $60, 20,000, $1.2 million. I have 15 engineers doing software. and I have QA, I have sales, I have marketing. Math doesn't work. We're going to raise prices of software. And overnight I raise the prices of software by tenfold. Yeah. I said, people say, why? I said, well, I can't do the software and get any money and survive at $60. So everybody thought that was a little crazy. And all of a sudden, our software is selling now at 10 times the price. Then I scratched my head, why did I say $600? Why didn't I say $6,000? It's all arbitrary, right? So I want to see, what do other people do? I started to look around at the prices of comparable things. IBM and Digital, there were two main computer companies, and I looked at their price list. IBM was selling, Digital was selling very comparable to what we are selling, but $30,000. But they had bundled everything into a box. Hardware, software, everything you need to do a networking connection. We were selling pieces, components. So you buy hardware, you buy software, you do anything. I said, why don't we bundle everything into bots and price it right? Well, I don't have the Digital brand, so why don't I price them at half the price of Digital?
Okay.
Instead of $30,000, $15,000, we will also guarantee money back guarantee. If stuff doesn't work, send it back. But I also promise send a person out to make it work for you. We'll make with guarantee satisfaction.
So let me pause you here and say, because there are two awesome insights, which I've heard from you in this sharing that you've done. The first one is that, you initiate your journey as an entrepreneur. You were trying to solve a problem for a customer, and then life pivoted you towards solving the problem for your venture. When it gave you a chance to pivot from an entrepreneur to a CEO. And you would know that, it's not an easy journey, because for most entrepreneurs, making that shift is the hardest shift, because the entrepreneurs, they love solving a problem. But when it comes to running a business, maybe that's not the core strength, but you did it. And what I heard is that I've seen entrepreneurs playing the market by discounting the price, but you actually jumped your price 10x or even more than that. That's very brave.
Well, so a mathematician, the math wasn't working. If I didn't raise the prices, more I sold, more I will lose out. So there are several things happen, right? You start to understand the price has nothing to do with your cost. Price has to do with the value, the perceived value by the customer. So I had to understand what is customer's alternative. Once I realized that Digital is able to sell the networking connection for $30,000, I said, why am I selling that $2,000? That was roughly our price. And so I was able to justify $15,000. But there were several other things. Your customer needs the best you can offer. Both in product and in service. And there was no way I was going to be able to offer him the best that he deserves, especially in service. And so, so there was a saying that I remember from my childhood. It went like, yeah, Mahindra Roy 8 bar, Sasta Roy bar bar. Yeah. So if you charge the price, you have the margin to give him, the service, give him the quality that he deserves. He doesn't remember. If you sell him cheap, he doesn't remember that he didn't pay you much, but stuff doesn't work. And every time that your stuff doesn't work, he's selling you for service, and you don't have the resources to serve him. So both him and I are losers. And so once I understood that, I need to give him the best, then I need to be paid to do it, and and that's what we did. Coming back to transition, there was no time to think. We had time running out.
Yeah.
I don't know how to do it. I have to do it. And so that was the basis of what do we need? Why aren't they buying? So once I solved that problem, the margins are not very good. You raise the prices tenfold in software. Yeah, that's better. What's the rationale behind just raising prices? So then I figured out the value proposition that you're offering, and then we price it to the market.
So as they say that the crisis is the biggest opportunity, because it actually pushes you to solve a problem, because you have up against a wall, and you did that in your journey. So would can we call it that this was, increasing the price of your offering or your product was the single biggest decision which you took?
Doing the value price, it was a single business decision. That was my maturing as a CEO, starting to understand that customer value proposition to customer has to be matched to the real value that you're delivering. Has nothing to do with your trust.
Okay. And when you solved this problem that the company was out of the financial, problem situation, then what were the metrics, as you were scaling the business, what were the metrics on a quarter on quarter basis or month on month basis you used to track?
So then I was engineer, so I was not a CEO before. So once I stabilized the ship, I started to look around, see what people do. Yeah, all of a sudden, I started to realize, there's certain ratios, that most of the good companies have, and I looked at my ratios; they were not very good. Yeah, so gross margin, yeah, in a high technology, high value added product, gross margins has to be upward of 60%, maybe 70, 60-70%. Earlier it was down to 40% for us. I brought it to about 70%. Then there's other thing, revenue per employee.
Okay.
The you you can't get ahead of the game. Revenue per employee is a measure of efficiency of your business. And to be able to pay good salary. By the way, main expense for most of the technology company is the salaries and the benefits. So unless you are making revenue per employee of enough value, enough money, you can't pay them well. You can retain them.
Absolutely.
So I started to see, if I'm paying the employee $50,000, I need to at least make $100,000.
Yeah.
And eventually, later I learned, when I was working at Novell, that Ray Noda had a very simple formula of my boss at Novell. He said, I need to have three components. I need to pay my employee, I need to run my business, other expenses, and I need to have a profit for my shareholders. And each one should be 1/3. So to pay $50,000, I need to make $150,000 worth of revenue. And he's give 50,000 employee, I'll give 50,000 to my shareholders, and I'll spend 50,000 to run the business. It's a it was very elegant way of thinking. But when I was doing it, I said I need to make 15 percent of profit, and I need to make sure that I have enough to be able to attract people. And so the 50% profit became the very big draw, because without being profitable, you need to be raising money. And we already were told that no more money for you, and I took that very seriously. But also, once I raised the prices, I was starting to make profits, and I didn't want to lose my profitability.
Yeah. So I think you came from a time that where there was access to capital was very difficult. There was scarcity of capital, and which pushed you to basically focus on profitability. So what would be your advice to the modern day today's entrepreneur? Because there the thinking is, first let me build a market share, then I'll worry about profitability, because capital is very easily accessible.
Yeah, that's what people are doing, but that's a wrong way of thinking. A hallmark of a successful profit company is the capital efficiency.
That's right.
Too much capital breeds bad habits. You become a lazy thinker, lazy implementer. Just because capital is available doesn't mean that
you spend it.
you spend it. You waste it is what waste is what I want to use. At some size, your unit economics, has to be positive. For every marginal unit I serve, I need to make margin, more than it's costing me, right? Every unit is profitable. The reason I'm not profitable as a whole is because I'm invested in sales, I'm invested in marketing, I'm investing in scale. But at some size, where I should have enough units sold to have enough margin made to overcome my this overhead expenses, and that number, in my case was $10 million. I was profitable at $10 million in revenue. I see people get into $1 billion in revenue and still not being able to profit. So at what size will your model clicking? what good is market share if you're still looking for the capital from outside? But I think of profitability as a declaration of independence. Now you're totally independent. You're not dependent upon the mercy of markets to give you capital to run your business. Once you become profitable, you are freed.
You're free, you're Atma, as they say.
Yeah, you're Atmanirbhar, yeah, that's the word. It's in entrepreneur's interest, yeah, to reach, break even to profitability and grow profitably. Market shares, are fine, but they don't pay the bills. Look at what happened to Baizu.
Yes.
We can look at Paytm, right? Paytm went public at $20 billion in valuation. They're not profitable. Their valuation has been what, 8 billion, 9 billion right now?
Yeah, something around that.
Yeah. 60% of all the shareholders lost money, right? So capital efficiency is a hallmark of a good company. And capital efficiency means that every dollar that you spend must count. The best financing is the customer financing.
Yeah. Yeah. Absolutely. If your customers are financing you, there cannot be a better good news than that. And another powerful insight which I gathered from what you just told us is the metric which you track was revenue per employee. And I kind of, completely relate with that and agree with you because, just like a leadership at the country level, should focus on growing the per capita income of every citizen. I think every business leader or entrepreneur who's running a business should focus on growing revenue per employee because that's how you bring in affluence for the people who are working for the business.
Yeah. It also is a very easy measure to have. So I would not allow a new hire until I have additional sale to be able to justify hiring one more person. So as a CEO, very quickly, we had about 60 people, and at that time we were making roughly about $100,000 per employee, and I had to have $6 million worth of revenue, to support them, and until I made an additional $100,000 of revenue, and not for 1 month, for 2 months. So I have now $100,000 of new revenue. I can afford to hire one more person. But I needed to make sure that that's not a blip in 1 month. 2 months in a row.
And markets, when you talk of listed markets, so a lot of my work deals with that. So there is investors, they see this, they one trait in quality of management, as they call it, is capital allocation. So what you're saying is, just you've told us about that you had a certain benchmark to hire new people, is that you will be allocating fresh capital towards new hires only if you've justified
Based on the revenue.
based on the revenue. So that
Yeah.
is
But then I also started to say, all right, 100,000 was the number I had this year. Next year I ought to up that number to 105, 110.
that's right.
So very quickly, you start to improve the quality of your business. I need to be able to give raises to my employees. I need to be able to, So not only you have a benchmark, but you set the goals to improve them.
Absolutely. And as the business scales, the venture scales, then the ability of the business to hire better quality people also goes up, which could be more productive and continue to raise that bar. So these are incredible insights. Now that we have learned from your journey about your venture, now let's turn a bit towards Thai, because that's also been a very big chapter of your life. So why Thai happened, when you were thinking of setting up Thai, founding Thai, what was the problem you were trying to solve that time?
So there were several of us, who had done well. 7, 8 of us in the valley. We met by chance, at a meeting, and we started to compare notes. And all of us had a very similar journey. It was a very lonely journey. We had no mentors. Nobody believed in us. Nobody, was there to, to lean on when you needed some help. And so somebody said, it shouldn't have been that hard. And discussion from there led to see, we ought to become the models, mentors, and the role models, for the our young people, and that thought, led to formation of Thai. Victor Hugo saying, the idea whose time has come, nobody can stop it, right? So we decided to do a workshop for entrepreneurs, back in 1993. workshop for entrepreneurs was, we will, have open session. Maybe 100 people will show up, and we'll, start around, and discuss various issues. When we started to promote it, 500 people signed up.
Oh, wow.
Went very, very well. It was very well received, and word started to spread. Hey, so now we have a conference. It's over. Now what? So we said maybe we'll have a once a month meeting, networking meeting. So every third Wednesday of the month, we'll have a meeting. 200, 300 people will show up. So this thing is sort of, pulling us along. We are not pushing it. People from Boston say, "Hey, we love what you're doing. Can we do it this too? Why not? This is what we do. Here's our logo. Here's our bylaws, and here are the things we do." So they started doing the same thing in Boston, Southern California. And then the word spread to India, Bangalore, Bombay, Delhi. They want to do the same thing. Before we know, 12 chapters formed.
Wow.
And they were all independent chapters. We allowed everybody to use our brand, logo. We allowed everybody, told them what we do. But these were all independent chapters. After a while, somebody, C.T. Prahlad, to be exact, said, you're playing with fire. One of these chapters may have a dishonest person, to use your brand to do stuff that will sully your reputation. We are to have some level of quality control. So that's when we formed Tide Global. Tide Global's job was to keep the quality, make sure that nobody is able to use this logo, this thing for anything other than what we do. So we came up with a franchise agreement. If you want to use our logo, then you'll have to do nothing but entrepreneurship, no cultural, no political, no religious things allowed, but all the power was still in chapters.
Okay.
Each chapter raises its own resources. It does its own programs, but formula has become very, very standardized. And we have now close to 70 chapters worldwide.
So as they say, when your intent is noble, it tends to spread like wildfire, which happened in case of Thai because the intent was actually of giving, helping fellow entrepreneurs. And only when you give, you get. So I think that's how.
But also, we started to produce results very quickly.
Yeah.
It was not an inter-driven. Within a year after we started Thai, Hotmail formed, Exodus formed, the Indians were becoming more and more entrepreneurs. So it was very visibly successful effort. We are driving forward, we are paying forward, but there's a feedback. Results are producing. Nobody wants to do stuff that doesn't mean much, right?
That's right.
So this turned out to be a very productive for everybody. Right?
Now let's come to and talk about the core of this conversation, which I was waiting to talk to you about and learn from you, is what pattern recognition, which you speak about. So tell us, are there some traits in companies, some metrics, which will tell you, or you can foresee in advance that this company is going to scale or this company is going to die?
Sharp focus on a single idea. When I was growing up in India in 50s, there was a radio ad, which went like this: "Sir dard ke liye aspro lijiye." Very simple message, clear. I'm solving the sir dard problem with aspro. And by the way, I used that same technique when I started to advertise for networking headaches. We got the a solution for you. And so the entrepreneur who has a very sharp focus on the problem he's solving, when he starts to become, well, I'm going to be Uber of this and Uber of that, there's an issue there. So you want a person who's innovative thinker, is identifying a real problem, and it's not an imaginary problem. It's a real problem. He can say, company XYZ has this issue, and I know if I had solution, they will buy. So he has to find so when I talk to the entrepreneur, I want to understand what problem are you solving, who are you solving it for, some potential companies that will buy from you, and then you might quickly come back and say, how large is the problem? How large is the problem? Is that one off, two off customers, or hundreds of thousands of people have the same issue? And then very quickly the next is the value. What is customer doing now? What is his alternative now? How much he's spending there? Because if he's spending, and I'll jump to that in a second too. You need to start the size of the problem. You need to start on the size of the the value that so that value decides how much you can charge you, right? And then you can do your math. 100,000 people had this issue. They are willing to pay me $1,000. There's $100 million problem out there, and I can do capture that one. Like a large market is required. A changing environment is required. If a market is static, if a market is not large, it's not worth you are doing
Going there, yeah.
you are doing there because the capital you spend may not be true. And if market is static, is not changing, then the mid guys have advantage.
That's right.
Mid guys have advantage. Because they can always that the a changing market entrepreneurs have a huge advantage. And then because they are age, they can quickly move. Big guys have trouble. They have inertia. They have trouble moving, right? So you start to define see a pattern. Large market changing, technology is changing. Somebody is doing this way, and this new way of thing is going to upset the apple cart. And like, I better be the one who does that. And the very enough value being added. Can I get there early enough with the partial solution to solve the problem partially? The one of the things that one of the biggest skill that entrepreneur needs more than anything else is salesmanship.
Salesmanship, okay. Very interesting.
More than technology.
Yeah.
You have to sell yourself to leave your job to don't do it. Yes, you have to sell yourself. You have to spell your spouse, to suffer with you. You have to sell employees, potential employees to come and work for you, maybe substandard salary. And you have to sell to the investors to give you the money, to fund you. And then you have to sell to the customers yet unfinished parts with the future promise. We are always selling. So selling is the skill that an entrepreneur must have, much more than any other skill.
Yeah. So first you need to have a compelling story, and then you should be a compelling storyteller.
The company storyteller.
Yeah. So now, so you've come a long way, and you mentored, thousands of investors, invested in hundreds of startups. So if you have to give advice to today's entrepreneur, what would be that one single biggest advice you will give?
My starting advice to entrepreneur is don't focus on your technology, don't focus on the stuff. Focus on the problem that you're going to solve. Identify a customer problem that a unmet need that needs to be done, and then find a solution and technology to solve that problem. Come from outside in rather than inside out.
Inside out.
Yeah.
And these days we talk a lot about, unicorns. So should an entrepreneur should also be driven by that goal that I have to become a unicorn?
Absolutely not. Absolutely not. Because unicorns happen. You cannot plan them.
That's right.
You cannot plan them. This company, the Terser in the US, started 2.5 years or 3 years ago. 4 young kids from MIT. They were going to use AI to help make the programming more efficient. They weren't thinking big. They raised a couple of $1 million. Within the first 2 months, they sold $20 million worth of stuff. Within the first year, they sold $100 million worth of stuff. And now 2 years later, I don't know what they're selling, but they're worth $29 billion.
Yeah. Okay, Kanwal, now I also bring to a very interesting, paradox, which you shared part of the conversation because you played kind of both the roles. That what is the difference between an entrepreneur and a manager, and who do you think is more important for the society?
So, so entrepreneurs is an innovator. He's a disruptor. He's a creator, and he's restless. He makes something out of nothing. Manager, on the other hand, is a manager of assets. Assets should be employees, should be customers, should be factory, should be inventory. His job is to make sure assets are being properly utilized, and trains are running on time, tickets are being sold, right? Yeah. So the manager is a streamliner. His job is to make things running smoothly. Manager is very happy to improve 5% improvement in efficiency. Yeah, yeah. But he likes predictability. He likes stability, and but he, his main focus is to make sure resources are being productively deployed and improving efficiency. So totally different mindset. Totally different mindset. Entrepreneurs don't have any assets. They move fast. They don't have any things to So, but the problem turns out to be the entrepreneurs, when they start to succeed, they start to produce assets. If you start to have revenue, you start to have customers, you start to have products, you start to have employees, you have assets. So the entrepreneur needs to become somewhat managerial.
Managerial, yeah. So entrepreneur is a passionate about solving the problem, and once the problem has been solved, then the manager is running the.
Yeah. Entrepreneurs in society, you ask me, who is more important? They add dynamism in society. They're making sure we are moving forward. Managers, on the other hand, add stability in the society.
Yeah, very good point.
They add stability in the make sure the resources which are deployed are productively employed. Managers help you stay by making sure everything is working. So you need them both.
You need them both.
You need both. If it's all managerial, you become very stagnant. If you all entrepreneurial, you become very unstable.
Unstable, chaotic, disruptive.
Yeah. So a good society like America has a very good balance.
I think that's a great insight, and thanks for sharing that, Kanwal. So now I wanted to bring to you about your book and talk a little bit about what triggered for you to write this book.
Well, so I have been writing the blogs, LinkedIn, which are very popular.
Okay.
About 15, 20 years. Some of these blogs are read by 200,000 people, 300,000 people, and one or two have been read by over 600,000 people. And so I get a feedback, they're popular. And I picked up one topic, one episode in my life, I stay very focused on that. So my son Ben, had been after me. He had been reading them. He had been collecting them. He had a bit sad. He said, "Dad, there's a story here to be told, and you're getting old. We need to tell the story because it will be very helpful for younger entrepreneurs." So he was on my back 3-4 years. Then my wife was not well, so I was homebound, and so I sat down and started to help write. The book is meant to inspire young entrepreneurs, young people to become entrepreneur. So I think of entrepreneurship as a goodness by itself. Country like India, maybe I give you a little bit of perspective of my India. India was one of the most productive, most creative, most entrepreneurial society when the British took over in 1800. We are the largest economy in the world, 25% of the world's GDP. By the time they left, we were down to 2% of the world's GDP. The tragedy of India was we chose to become socialist. From 1947 to 1991, that 2% became 1%. So we cannot be blaming British for that.
Absolutely not.
So I kept saying, and this is 1991. We are starting Thai. We are thinking through. We are seeing the impact that is having on the Indian Americans there. Why can't we bring entrepreneurship to India? And that became my mission of my life. So now I am looking at the whole thing. We have come a long ways from back then. We have 200,000 entrepreneurs. We have hundreds of unicorns, but it's a drop in the bucket. It's a drop in. India has now become we have turned the ship around. Instead of 1%, we now 3.5% of world's GDP. We have become the fourth largest economy. I'm saying, yeah, pretty soon we'll be number 3. Are we happy being number 3?
Yeah.
Should we try to be number 1, number 2? Can we aspire to a rightful place of being number 1
Which we used to have earlier.
earlier?
Yeah.
I'm not saying tomorrow. So can we play a long game of 50 years
That's
and get back there? And that's one of the things. If India was to take these 200,000 entrepreneurs to million entrepreneurs by 2030, and to maybe 10 million entrepreneurs by 2047, I think we can be number 1.
great. And is that the central message of the book which you would like to go?
That's what's driving me.
Okay.
That's what's driving me. And 10 million sounds like a large number, but it's less than 1% of Indian population.
Yeah, it's nothing,
Yeah, nothing. So and just another way of thinking, back when Modi became prime minister in 2014, 2015, there were 500 entrepreneurs.
That's
We already have taken that 500 to 200,000, 40x. Can we go from there another 50x to 10 million?
yeah.
And so the central message of the book is a ordinary Indian can be a good entrepreneur. Am I the only Indian, Kanwal Rekhi, born who could do what I did? Are there millions of me more out there
Yeah.
in society?
Yeah. So as they say that entrepreneurs, first in your journey as an entrepreneur, you gave back to the society by creating an economic opportunity for so many people, creating jobs, because entrepreneurs, besides solving problem, also do one great thing is they create jobs, right? And that is the best way to give back to the society. And now after decades, you're doing another great thing of giving back to the society is sharing your story, inspiring so many entrepreneurs which couldn't be there.
Yeah. So if I was to put in the simple term, what is India's number 1 problem? Poverty. Poverty, massive poverty. Even with this size economy, only $2,500 per person per capita income, right? US is 75,000. We have world's largest number of poor people. So what is the solution to the poverty? Before we do anything, we need to create more wealth. If poverty is a problem, the antidote has to be wealth.
Absolutely.
Wealth has to be created.
Then only it can be distributed.
The only people in society who create new wealth are the entrepreneurs.
That's right. And to add to that, a thought, a lot of, debate and conversations happen around the concept of concentration of wealth in the society. Is India going to go the America way? But I think we have to first know that first distribution has to happen only when wealth creation will happen.
So I talked about capitalism and socialism, and I reframed that as a politics of wealth creation and a politics of wealth distribution. So we have followed the policy of wealth distribution for a long time, and there was nothing to distribute, and we stayed poor. So we should follow the policy of wealth creation. I think worrying about concentration is worried about the wrong end of the problem. We'll solve that problem if that's the problem, because we have a democracy. We'll have the rules and laws. We can change, but let's create that right now in society.
So, Kanwal, now we are coming towards the end of the conversation, and before we close, I would like to, know your one thing from you. See, if you have to look back, if you were to start back or restart your entrepreneurial journey today in today's world, would you be a different Kanwal Rekhi, or you would be the same Kanwal Rekhi as you were?
I can imagine being able to do better than I did. Nobody, including myself, would have ever expected me to do what I did. So I, when I say, the one thing I've learned in life, a better is an enemy of good. You should, if you're good, you should be happy. You can always think you can be better, but you can always be worse also.
That's right.
So I don't know if I will change anything at all. Maybe I would have started earlier. And I tell younger people, don't rush straight out of school, at age of 21, 22. The golden age of becoming an entrepreneur, in my opinion, is between age 25 and 35.
Okay.
You are still young enough, you are still foolish enough, you still have energy, you still are not loaded down with responsibility. Yeah, you can make 1, 2, 3, 4 attempts, and most entrepreneurs succeed in the second or third attempt. But you reach 55, your children are out of home, your daughters have been married off, you are still young, you still have energy. One more chance to become an entrepreneur.
Kanwal, now let me have the privilege of introducing your book that you've written. So Kanwal has written this book. He captured his incredible journey into a book called The Groundbreaker, which I think should go to everybody. Everybody should pick up a copy and read this, whether you are an entrepreneur or you wish to be an entrepreneur. Kanwal, thank you very much for doing this for the world and sharing your compelling story. I'm going to read it and I enjoyed my conversation with you.
I enjoyed the conversation too, and thank you for having me. Thank you.
A pleasure. Thank you.